Alright, guys, let's do it. Let's expose everything today. So, the Trump Xi talks are done, and we have quite a few outcomes. Now, both sides have taken a step back in this direct confrontation, but it's only the calm before the storm. The US and China, they are gearing up for the long war. The US has made concessions, China has made concessions, but both are coming from very different places. Now, China has exposed major cracks in the US economy, including the rare earth dependency, while the US has retreated from major tariff threats that will backfire long term. And the biggest sigh of relief the US has gotten is China buying soybeans. Soybean farmer Scott Bessent is having his victory lap, and he's eager to spread the good news.
So the Chinese have agreed to buy 12 million metric tons of soybeans during this season, right now, between now and should be January. And then for the next 3 years, they're going to be buying a minimum of 25 million metric tons per annum for the next 3 years.
So you heard Bessent. China will be buying 12 million tons of soybeans this year. And for the next 3 years, Beijing will be importing a minimum of 25 million tons annually. Now, sounds like a return to the Phase 1 deal from the last trade war. But here's the rub: China didn't follow through back then, and they might not follow through this time because they are also watching if Trump will honor his word as well. We are still in a standoff and nothing is guaranteed despite what Scott Bessent is trying to sell us. Now, going from 0 to 12 million alone is a very big commitment from China. That's more than the average purchase over the last 4 years. So, from now till August 2026, China is expected to ramp up their soy buying by an insane amount. As we mentioned before, China has a 10% tariff on all US goods. So that means Beijing is either subsidizing their own importers for US soy, or domestic companies they are eating the Chinese tariffs, which hints to us that this isn't a permanent deal, far from it, especially if the trade war drags on indefinitely. This is just a short-term reprieve that Bessent isn't telling us. It will last until Trump gets out of office, and then what? Here's the reality check. There's no reason for China to keep buying from the US if supplies in Brazil are ample and cheaper. And we all know Chinese people, including myself, we all love a good discount. It's all about saving money. A big threat here is Brazilian farmers. They are a farming powerhouse and they can scale the production of their fields very quickly. And that alone can overwhelm their American competitors. If Brazil increases global supply of soy, US farmers will naturally earn less per bushel. But perhaps the real problem facing US farmers isn't even China or Brazil. It's how terrible the economics of farming is in the United States, and the tariff war is only going to make things worse. This chart highlights the real problem facing US farms. Expenses are climbing like never before. Since 2020, production expenses has exploded by at least 30%. Why? Because the Fed printed trillions of dollars and flooded the world with liquidity. So a ton of money has beaten up the cost of everything. From livestock and feed to labor and fertilizers, everything now costs more. Meanwhile, Trump's tariffs are going to make everything else, including chemicals and machinery, more expensive. The only way to save US farming is to dramatically cut costs or to have a production miracle. Either way, that's the only solutions left. But truly, what else can you save on? The inputs still have to be bought. You need to replace every single worker with robots and knock away interest expense, which is around 7% of total farming costs. And that's probably the bare minimum. Oh, yes, you'll have to reverse the tariff war to make farming machinery affordable again. That's the real struggle Trump should focus on, making America affordable again. Now, yes, China will buy 12 to 25 million tons a year, but Beijing can't save horrible economics. Every acre of row crops in the US is losing a ton of money. Soybean farmers are losing over $100 per acre. The more they grow, the more money they lose. This is an insane business model which is unsustainable even with Chinese demand. Now, these are the underlying mechanics Bessent isn't talking about. Yes, US farmers will get to move more volumes of soy all the way to China and they won't rot in storage, but government subsidies will still be needed here. He's just hyping up a band aid as the ultimate solution. But how can it be? Even if I put myself in America's shoes, I don't want my entire farming industry to be dependent on China alone for salvation. And in the grand scheme of things, US soy is losing ground because of cost competitiveness. Brazilian exports are growing because of big reasons the US just cannot deny any longer. Brazil's cost of production is 10% cheaper than the US, and this is American calculations themselves. That's a lot of margin to play with, especially when selling commodities in bulk. It's a razor thin margin game. China will not abandon their BRICS partner as well. After the first trade war, China knows better than to rely just on American soybeans. Furthermore, trading with Brazil is probably entirely in local currencies. China buying soy from the US would mean dollar transactions, obviously. And it's something that China probably doesn't want to entertain as well. More negatives than positives when buying US soil, especially in big amounts here. Now, what did the US have to give up? We need to ask ourselves this big question. Now, two big things happened, and the first was exactly what we predicted here. Trump didn't have the ability to enforce Russian oil sanctions on China. He would need to punish the biggest buyer of Russian crude, which is Beijing. But doing that will break global trade in a hurry. So Putin is still going to get his revenue. And because the price of crude is up, earnings could actually rise and not fall. And let's not forget the port fees have gone down as well. Now, the bigger issue is still the rare earths crisis, and Trump can't afford for the AI bubble to implode. He needs endless fields of data centers, just like in the Matrix, which means he needs Chinese rare earth supply as well. Now, the concession made is a big one. We'll start to see aggressive stockpiling of supplies and resources from both sides, except there will be a key difference here. The US has delayed their 50% sanctions rules to get a key license, the approval to import Chinese rare earths once again. And boy, is this concession a very big one. So for 12 months, Trump is going to drop sanctions on the subsidiaries of blacklisted Chinese companies. If the companies own 50% or more of the subsidiary, Trump blocked them from buying restricted US goods. Now, that was in the past. Obviously, the intent was to block Chinese companies, especially Huawei and SMIC, from using proxies. The plan was to prevent chip making gear from flowing to China. But now this is overturned. We can expect a buying spree from China. While Trump scrambles to buy Chinese rare earths, the blacklisted proxies, who are no longer blacklisted, will start buying critical gear from the US. It's both adversaries stocking up for the long game, but China has the edge here, whose weakness is easier to patch up. Now, given enough time, Beijing can close the innovation gap in semiconductors. They'll be able to manufacture anything given the scale of their talent and their supply chains. But for the US, trying to recreate rare earth supply chains, including the refining portion, is near impossible. Even if Trump is given 12 years and not just 12 months, it's still a monumental task. In rare earth magnets alone, China controls 91% of global refined supply. That's the actual useful input. It goes beyond just digging up rare earths out from the ground. We can expect the US to aggressively stockpile supplies from China. Now, whether China will allow that is another thing. But until Trump invests hundreds of billions to recreate the entire supply chain and hundreds of billions to subsidize the operations, this is just a reprieve. China can always turn off the rare earth taps, and the US would burn through the stockpiles considering how crazy the AI bubble is. Even Bessent doesn't have a plan after 12 months.
Right. What happens a year from now,
a year
Mr.
from now,
Secretary?
we'll be at the table. My guess is a year from now we'll be back at the table, and we'll get another delay, another roll, because what everyone misses is the Chinese have rare earths, but we have President Trump's threat on tariffs. The U.S., we are the deficit country. China has to export to us. So the deficit country, the always wins, the surplus country loses.
So you decide who got the better outcome. This isn't a great example for the art of the deal. However, let's talk about a bigger pressing problem brewing in the United States. And this revolves around the Fed rate cuts. Now, when we dig beneath the surface, we will realize that the money printing is truly back on schedule. It's horrific, but this is a stealth move that not many people caught on just yet. The Fed has officially cut rates down by 25 basis points. We are officially below 4% today. Powell shocked the markets when he said December's cut is not confirmed. A further reduction in the policy rate at the December meeting is not a foregone conclusion, far from it. We could have a pause in December and not another cut until 2026. Now, this makes sense from Powell's perspective. US tariffs are still crazy high, while inflation continues to rebound up. Now, this 25-point cut itself was because of Trump's pressure, but the summary of the FOMC decision tells us the pivot is here. The money printing flip has begun, and it's time to pay attention to this. Consider these three things. Trump's man in the Fed, Miran, is in favor of a 50-point cut. So we can expect greater cuts in the future, especially when Powell leaves in 2026. The Fed also admits that downside risks to employment have risen. Doesn't take a genius to figure that one out. Amazon alone is looking to lay off 30,000 workers, and there's more to come throughout the US economy. So another dovish statement here. But a big shock is the Fed balance sheet. Powell is going to stop shrinking their bond holdings on December the 1st, from December the 1st. And the implications are big, and we have to understand the mechanics of this. When the Fed stops reducing their balance sheet, that means they are preventing taking money out of the system. The Fed is sitting on a mountain of US Treasuries and mortgage-backed securities, or MBS. Now, in the past, the Fed was aggressively selling them to suck liquidity or money out of the system to bring inflation down. But the US economy is destabilized from Trump's own trade war. Since September last year, the Fed was selling up to $100 billion worth of US assets, treasuries and MBS included. But they are stopping in December this year. So more cash will be staying within the US financial system. And this is coming at a time when the Fed is cutting rates. Now, why is the Fed doing this? Basically to lower borrowing costs in the US, not just on the short end of the curve, but on the longer end as well. Now, Powell is cutting rates to push short-term interest rates down. That much is very obvious to everyone. The Fed is going to stop selling US bonds to allow longer-term rates some breathing room as well. This is basically financial engineering. Here's the problem. It's basically a pivot, and chances are the Fed's balance sheet will hit even higher over time. Since 2020, there's still an additional $3 trillion of liquidity stuck in the US economy. And should we get a liquidity event, guess what Powell will do? He has to monetize the debt and print money once again. There are so many black swans circling above the risk of a liquidity squeeze. We have the rush to develop US supply chains. There's the possibility of the AI bubble popping. US consumers could also just collapse after many months of tariffs. So this Fed pivot is very ominous. And if money printing does come back, it might just be on epic scale. '08 and 2020 might look like a cakewalk compared to what's coming down the road. But let me know what you think. Did the US one-up China, or was it Beijing who won out? And is the Fed preparing to print money once again? Let me know in the comments below. Stay safe. Be sure to smash the like button and subscribe as we navigate through this economic apocalypse.